There is one stock that is about to skyrocket. The company is Caterpillar, ticker symbol CAT. They have a 30% growth in their power generator segment. So the Caterpillar of today is not the Caterpillar that your kids like with the toy trucks and the real trucks that are probably the leader in that segment by far. Notably, AI and data center buildouts require a lot of power generation and turbines, and Caterpillar actually makes those, not just components. I think they make the full assemblies. And you might have seen that actually, just the Caterpillar logo on the side of one of these, maybe on the side of some type of industrial building. They do have over $1 billion in revenue. This stock looks great. They just had earnings and they're holding up. They're about to, it looks like, break out over that initial earnings reaction. Might come back a little bit, but we'll look into the chart, which is, of course, buyers and sellers, supply demand. There's another company in power generation, GEV, that's GE, General Electric Vernova. I think there might be a spinoff from GE, or, well, they're not GE, so they are a spinoff. I don't know how the ownership is exactly split up, but this company has a backlog in the billions for power generators. And the big growth for GEV is also in data center buildouts. So these are not all in bets on data centers, like trying to get shares in OpenAI or anything like that. Anthropic, rumored to go public next year, means that there's going to be more eyes on AI and the vertical, the supporting companies. These are definitely supporting the literal powering the compute. So CAT and GEV look poised to skyrocket. This is not financial advice, but let's take a look at these charts right now.
This is Sam Putnam.
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 So here's what we've got for power. This is actually for GEV. Good order volume and revenue, gas, turbines, and services. Caterpillar as well. Strength from power, generator. Sales jumped 31%. So if we look at what this company is, sure, they might be classified as farm machinery, heavy construction, but they make diesel and natural gas engines, industrial turbines, and they're a lot more than just a big, Tonka truck or whatever. I don't think Tonka is a brand of Caterpillar, but Caterpillar does energy and transportation. I don't know what their financial products segment is, but constructing data centers and powering data centers is part of that growth. This other company, GEV, there's a strong demand in electrification and grid, contributing to that order backlog as well. So I think that means not only the data center, but also the equipment connecting, say, natural gas. If you have a pipeline of natural gas near a data center and you want to redirect some of that, obviously you contract that, but this company can help generate power with that. There literally is a company that does just that. I think Bloom Energy is involved in that company that went up 200% this year, spinning up data centers like Colossus, the X data center, in a matter of months. Not a lot of growth in wind and renewables, but don't have to worry about that right now when they have this $450 million profit this year, and that power and grid equipment demand is so high. So we'll jump into these in detail, but let's look at the charts first. This is Caterpillar, and I did talk about this recently, to be exact, on the 25th, I actually talked about it, which is here. So pretty beautiful moment. If you were able to take advantage of that, you know, you're up a little bit. You do have to be a little bit careful. It might not break straight through that initial earnings reaction. The market does look to be, gapping up this morning, but it hasn't gone yet. So we have to see what actually happens here before we get over our skis here. And then as far as GEV, this company has a higher low as well after earnings reaction was so. And on a more serious, longer term view, this is a long base. This is 3-4 months at this point. And it might seem a little bit like, yeah, well, it's sloping down. It's like, well, it just went 175% up, and you don't expect it to slope down a little. I mean, the fact that it's holding up so well above, say, the first time it leveled off is pretty incredible. And as far as an entry, you want to find whatever entry you're actually going to use. So if you buy it here and you risk maybe pre-market, which is the $600 level, that would be pretty reasonable. It goes back to the high a couple of days ago. It makes the most sense. If it does pull back more, maybe it bounces off some of these highs over here, but you probably don't want some sort of line in the middle that doesn't really correspond to anything. And then for Caterpillar, if I haven't mentioned it yet, which I haven't really, an entry is, besides now, through 600, is maybe this pre-market high of 587. If the bus right through that, then down here at 580 is interesting. This high and this high. If the market pulls everything down, maybe you can look for a long off of there. So those are two different spots to get involved in these two different stocks. And as far as the whole reason to buy Caterpillar, it's just the data center build out story. And I've talked about it a lot. I don't think I really need to talk about it too much. But this is kind of the interesting thing. It was sort of a business that it sounds like customers asked for it, and then they built some generators or contracted another company or, white labeled some generators, whatever you want to call it. But it seems like they actually know how to build them, because now it's a huge part of their business. And then as far as GEV, I think this actually has always been their main business. I mean, they were a spin-off, but Vernova, it's actually in the renewables category. So power, wind, and electrification. And the electrification provides grid solutions, power conversion. So you can't really sell power, wind, and solar without actually connecting it to the grid. So it sounds like they know how to do that. This is obviously not like a engineering channel or anything super in the weeds like that. What we're trying to do is take a look at the fastest moving stocks over the past year. That's what I've got going on over here. And then looking through them to see what's an interesting buy. And I talked about ASTS yesterday. It did go, but it had a little bit of a pullback. So the market pulled back as well. But it is wise to wait, until maybe 9:45 to jump into stocks, rather than just jumping in the pre-market. HUT, pulling back a little bit. This could be a buying opportunity, but anything that is all related to Bitcoin, I'm not really gung-ho about yet. Oklo, this nuclear stock, is starting to turn up. The Sam Altman stock. Affirm, Upstart. I mean, I guess you could make the argument that buy now, pay later. This looks okay, actually. Could have a boost for the holiday season, but it's kind of a weak argument when the stock doesn't look great. I don't even know what this is, but this is a nice boost. It's nice to know what a company is before you get excited about them. We can look at that. This is pretty much the decision-making criteria to find stocks like Caterpillar and GEV. You have to compare them to these little companies, a semiconductor company in a lot of different countries. Materials. Semis are doing, I think, okay. I'm blanking on what the semiconductor ETF is right now. But Soxel is definitely one of them. Oh, SMH is the one I was thinking of. It's been strong recently. We've seen KLAC looks like one of the strongest semi names off of this peak year. That's definitely of interest as well. There's a lot of stocks that are of interest right now, but none of them are of interest for, a month or two long hold. Most of them seem like quick, 1 to 3 day buys or 1 month buys. It's Quantum Name turning up, but I mean, it's a lot. It's up 10%, but you really want to hold this now that it's already up. QS, this battery name's forming a higher low as well, along with AMPX, another battery name holding in there. Rocket Lab, a lot of these speculation names that went up like crazy and came back are looking like they're starting to turn up. Cleveland Cliffs slowly moving. Vertical Aircraft Takeoff Company holding in there. ONTO, that's already up. Open Door doesn't look super hot, even though it does have a higher low after these earnings. And VST, which is similar to GEV broadly, I think there's probably some notable differences that explain this sell-off. VST does not look, what did I just type? Oh, I typed GEV even though I was talking about VST. VST does not look as attractive as some of these other power generations. So this is retail electricity. So this is a little bit different. This is more in the next era energy category. They are constructing this battery storage project, but it's on a crazy run. It definitely deserves to pull back. It's just, you can see when it does pull back, those pullbacks are pretty vicious. So would probably leave that alone right now. That next era energy, though, is still looking pretty awesome. So it's not totally the sector. It's more like how this stock moves. Iron, the Google connection is there, but a little weak movement there. LEU, uranium turning up fine. If it can break out of this sort of randomly drawn line that you sort of see what's going on. If it can go, whoop, that's, ridiculous, but definitely possible. Lumen, ridiculous move up recently. And then ON is this on running. It's a semiconductor company. I think it'll tell us, right? Yeah, it's a semiconductor company. Semis have been doing well. Reddit looks good as well. These are all the stocks that have moved more than 15% in the past year per day. So they're also over $1 billion market cap. That over $1 billion market cap is a really important qualifier because you can find tons of stocks that have moved a ton. And the third qualifier that I think maybe hasn't been mentioned here is the liquidity. So if we do look at the liquidity for these, we can look at exactly what the scan is, but you'll find that the volume for all of them is over probably $100 million. And that basically means you can put in 1/100th of that, $1 million, with the click of a button, and you don't move the stock for the most part. And if that's not you, that's okay. But what it means is that you get the benefit of all these people, there's a spider, who do that, not moving the stock around, which when the stock does get moved around, it makes it super choppy. Say they sell out of it and that makes the stock crash. That can really be rough. Okay, we got spiders, we got phone calls. If you like these ideas, hit that like button. Helps the YouTube algorithm find these videos. If you think they've got some piece of useful info, that could be good. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post section. And if you want to try out this Discord live stream, which is starting in just a few minutes here from this live recording, head over to stockscommunity.com. You can join that 7-day trial and ask any questions in there. We also do a daily 15-minute drop-in. So give it a shot.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.